All right, welcome everyone. This is our session, Insurance and Development, Partnering in Risk, Resilience, and Transformation. My name is Helen Parham. I work with the UN Sustainable Development Solutions Network in our education department, the SDG Academy. I welcome you all to continue to use the chat, introduce yourselves, ask questions. We also have a question and answer ability on Zoom. So please put your questions in there as well. And we have a wonderful panel today. I will now hand it over to our moderator. Thank you.
Thank you, Helen. So my name is Patrick Paul Walsh. I'm a professor of global affairs and sustainable futures in University College Dublin, but I am on secondment to UN Sustainable Development Solutions Network with responsibility for education, Vice President of Education and Director of the SDG Academy. I'm actually here in Port of Spain in Trinidad and Tobago. So we're at the Association of Caribbean States Strategic Planning Week. And to be honest, I've heard nothing but disaster, risk, resilience, transformation, partnerships. So it's been a very good few days to prepare myself for this webinar. Just to say, this is a formal event. It's part of the ECOSOC meeting on financing, what's called the Financing for Development Forum, which happened for 3 days. And now for 2 days, there's what's called the fourth PREDCOM, which is the fourth session of the Preparatory Committee for the fourth International Conference on Financing for Development, called FF4D. The last International Conference on Financing for Sustainable Development was actually in Addis Ababa.
Looks like we might have lost Paul. His connection was a little bit iffy this morning. So let's just, apologies, we'll give him a moment. Here he is. Welcome back, Paul.
I'm not sure what happened there. I got dropped and I got picked up again. So the fourth, I was talking about the last conference on financing for sustainable development was in Addis Ababa. It was the Addis Ababa Action Agenda, which was in July 2015. I think it was interesting that during the negotiations, the hard stuff like agreement on data and indicators for monitoring, financing, stuff on migration was actually kicked down the road. But obviously, we're still struggling a little bit with financing sustainable development, but particularly financing development in the social, economic, and environmental aspects of the lower income countries or the least developed countries. So that's why we're here today. Just to say, there will be 2 outcome documents from the ECOSOC meetings, which are back to back. One is the normal outcome document, which will be given as a subcommittee of the High Level Political Forum in July. And the second one is going to be for amendments on the first draft, which will be the outcome document of the Seville meeting, which will happen, the Road to Seville, which will happen at the end of June and July. So they're trying to work with 2 things in one meeting. The objectives of our meeting today is that we want to launch a position paper on insurance and sustainable development. So Lorcan, who is a co-author with me on that position paper, along with lots of other research participants, will be chairing a panel on that. So we'll get a good flavor of what all that's about, and we'll have it there for you to read and to comment and give feedback on. We're also going to launch a complementary course, or what we call MOOC, online course on edX, which you can do at self-paced. And again, it's on insurance and the SDGs. Finally, we will be watching from the contributions when we do a report of this meeting. Maybe there might be some text suggestions on the actual first draft for Seville, or for the conference, for the 4th International Conference on Financing for Development. Insurance was mentioned 3 times in the zero draft. I've noticed it's gone up to 6 times, but I still think there's a few spaces, particularly on the health, on the kind of social, a few important things that I think insurance it does a good job on, where we could suggest a little bit of language might help in that document. So that's our objectives. Before I hand over to Lorcan on the panel, I just wanted to give a little bit of a personal background around this project that we've done with all the different partners. Um, so in terms of my background, I'm an economist. Um, I was an industrial economist, and when transition came, when basically the Soviet Union fell, the walls came down in '91. We actually went to Poland to put in a labor force survey, which they hadn't, and also there was no social insurance, like none, because you got a job for life in your state-owned company. So the idea that you'd move to a private company in another region, you had no social protection, no unemployment benefit, or no unemployment insurance. So that scheme was put in. And it just shows you for any sort of flexible labor market, the mobility of labor is just so important. And obviously, social protection and that type of unemployment benefit is just so important. And in countries where they don't have that, you really wonder, right? So with my work in Africa, for example, I was quite shocked to see no insurance elements at all. Like the obvious one was social protection. But when we were doing HIV/AIDS trials with second-line drug therapies about keeping a person well, keeping the family well, keeping kids in school, etc., what you could actually see with the demographic and health surveys, if somebody got sick, their coping strategies was to down their assets. They had no insurance. So these rich households, within a year, 2 years, became poor households. And there was no cover for the family or the household or etc. So again, you'd wonder how people protect their assets when they have such a health shock or a social shock. And then finally, it's one thing that Jeff Sachs is emphasizing. It's one of the things that's emphasized in the first draft of the Financing for Development Outcome document is the ability of countries to borrow in bond markets for long durations, like 40 years at low interest rates. I mean, how can you fund a health system, an education system, road infrastructures, if you actually can't borrow money, right? So again, in the document, and I think it's very clear, even with the intergovernmental banks, there has to be a framework where people can actually underwrite, give guarantees, and also use insurance and reinsurance to actually make it possible for African countries to down money to spend on education and health and other things. And this is kind of the ambition. When Lorcan came into my class a few years ago, he's a really strong background in the insurance and reinsurance industry. He was a little bit like me, asking every class, every question, like, where's insurance? Like, why are people not thinking about insurance? I mean, how can you do any investment or banking without insurance, or any sort of overseas development aid, for example, without insurance, right? And there's another example quite recently of USAID dropping out, was 48 billion, but they, as an agency, used to partner in portfolios of agencies, and then they would subcontract to local NGOs, for example, right? So what would happen is, why didn't they insure themselves with the possibility that a partner would drop out? Like, why is it the whole industry's after shutting down, and they didn't anticipate that risk? They didn't insure themselves against that risk, right? So there's everything I see at the moment, particularly with government, there is a risk. And just to give the last thing I just want to say is, the the lessons, maybe a few reflections, because I've worked all my life in the public sector. I'm a career academic, but I've done stints in the World Bank, the IMF, European Commission, etc., doing consultancy with the UN, etc. But so I'm not a private sector person. But some of the things that surprised me after doing this, what we call backcasting work on the position paper, was the role that insurance plays ex ante, in the sense, and this makes a lot of sense. So if the tax, one thing is, I just feel a lot of fiscal expenditures are not underwritten. It's the taxpayer underwrites, and if there's mistakes, it's the taxpayer who pays, right? So for example, I'm thinking in Ireland of our overspend on the Children's Hospital, for example, right? So why was that not insured? Like, if there was going to be delays or some sort of problems, right? But the great thing about the insurance industry is, before they insure you, they do an analysis of deterministic risk, and they'll tell all the stakeholders involved in all the contracts, have a look at what you can mitigate and adapt, because we're not going to insure you until you bring it down to a residual risk. But that in itself builds resilience. That sort of analysis and that sort of data work and that sort of partnership builds resilience, right? So you're just trying to reduce as much as possible ex ante the possibilities that you are going to face a shock that is actually quite destructive to you, right? So that's one lesson. The second lesson is we at SDSN and the UN, we think of some key transformations that have to happen for well-being on the social side, on the economic side, on the environmental side. And as we say, we need these investments. Like we need investments to go up to say $7 to $9 trillion. But I think what we're learning is there's going to be no investment without insurance. And this is going to be, it's not insurable, it's not really investable because it is transformations to a future that we want, but we're uncertain about and we're not quite sure of the pathway. So we do have to collaborate and actually make sure that we tease out these pathways and risk share, build resilience in these pathways, and do the transformation and partnerships that are appropriate, right? So then the last lesson before I hand it over to Lorcan is that we kind of walk the talk on what I'm going to say now, because actually the MOOC is a partnership between the public, private, and the scientists, and so is the position paper. So in a way, we actually curated this together and brought our expertise and resources together to deliver the design principles and the recommendations for how we actually move to an opportunity register and how we can get around these transformations that have to happen to achieve sustainable development going forward. But it is also an emphasis that in the actual first draft, what you'll see is a big section on science, technology, innovation, and capacity building, right? And I would just say is, look, knowledge is not knowledge. Some people think knowledge is there. Maybe academics to do all the work and then they say, this is the knowledge, take it off the shelf, apply it. That's not reality. The reality is in science policy interface, the stakeholders have to get together and create this new knowledge, and particularly how to adapt and implement. They have to do that together. They cannot do that as a separate exercise, and they have to do it early on. So capacity building and training is going to be a big thing we're going to emphasize, that this can't be done unless we have the public and private and scientists and the actuarial scientists and so on, and open data in the room. Sandboxing, or at this stage, I think it's probably desert boxing. We're going to need massive planning to actually achieve the things that are there. So I think it's been very well received in terms of highlighting the role of insurance. And I think now we're going to have a nice MOOC and a position paper so the stakeholders can think about the importance of this. And obviously we'll do a call for action, and we'd be very happy for people to express interest on our landing page to do any sort of webinars around the preparatory documents or to actually go into kind of innovation hubs so that we can actually go to the next step, which is actually working with governments to propose particular products that would actually potentially get funded and work. But this, again, that's why the design principles and the recommendations are there, because I don't think we have those institutions or those mechanisms at the moment to actually do that. And that's really what the position paper is about. So without further ado, then I'm going to hand it over to Lorcan Hall. So he's a senior advisor at the SDG Academy, but has a life career in insurance and reinsurance. And to be fair, it's from his work in the Masters of Saving Development in UCD that we finally said, okay, we really have to address this issue of insurance and the SDGs. And this is where we are. So finally, we have this position paper and MOOC to articulate this vision. I'll hand it over to you, Lorcan.
Thanks, Paul, and thanks again for your support and collaboration over the past year. For this portion of the event, we're delighted to have secured a panel of 4 distinguished speakers. I'm just going to walk through them briefly. So we have Ivo Menzinger, Chair of the Operating Committee at the Insurance Development Forum. Ivo is also MD for Europe, Middle East and Africa, Swiss Re's Public Sector Solutions Division. Ivo has been, in his work at the Insurance Development Forum, he's been a driving force in the organization's expansion over the past 10 years. We have Dr. Francisca Arnold-Dwyer, Associate Professor at Law at University College London. In my view, and Francisca is the world's leading researcher operating at the intersection of insurance, climate change and law. I think this will be clear when you hear and absorb what Francisca shares today. Matthew Bray, lead advisor for disaster risk financing and insurance at the UN World Food Programme. Matthew has been pioneering the use of insurance at the micro, meso, and macro levels, with some of the world's most vulnerable populations over the past 10 years. Very important work needed now more than ever. And finally, we have Shelley Habecker, PhD, Global Life and Health Sustainability Co-Lead at Swiss Re, with a background of working with NGOs in Africa. Shelley's been successfully innovating life and health partnerships in countries with limited social protection and healthcare systems. Just briefly, before we hear from our speakers, just let's restate the context for this discussion, which Paul touched on. Only 16% of the SDG targets are on track to be met globally by 2030. One critical constraint is finance, with the annual SDG financing gap standing at $4.2 trillion. This gap is frequently spoken about, but the discussions, the solutions often center on banking, lending, debt, and investment instruments. These are crucial, but so is insurance. The insurance industry is a cornerstone of the global financial system, with assets under management of $40 trillion. The industry also makes annual payouts of up to $5.5 trillion and holds liabilities of $36 trillion for future payouts. It's clear with the size of these numbers that the industry's distinctive risk management capabilities play a crucial role today in helping households, businesses, and governments navigate risks, build resilience, and enable transformations from unsustainable to sustainable practices. I just want to echo what Paul actually said a moment ago about there's an important point to emphasize about how critical insurance is to the real and financial economies. It's well understood that lending and investment is required to spur economic growth in the real economy, but insurance is often, or nearly always, required to de-risk and unlock this finance. Without insurance, it is very difficult for households, businesses, and governments to take risks, stunting the potential for growth and development. Therefore, without insurance, many of the transformations called for in UN multilateral development agreements and in the first draft of the outcome document from the Financing for Development Conference in Seville, it will not and cannot occur. I think that's an important point to emphasize. This research project started with Paul and me just wondering why, very simply wondering why insurance receives limited attention in these UN multilateral development agreements, despite their numerous references to risk and resilience. Understanding this was one of the research objectives for the SDSN position paper that we're launching today. In addition, the paper explores how to mainstream discussions about risk, resilience, and insurance, and presents ways in which the public and private sectors can scale the use of insurance in development efforts. Just a bit of mechanics on this piece of work, 42 in-depth research interviews were conducted with senior administrators and executives with global roles from across the public and private spheres. Most of them practitioners. Again, just echoing Paul talked about the science policy interface. There's also the science policy practice interface, and we've spoken mostly practitioners, the public and private sector side. It's important. The synthesized findings are presented in this paper as 11 design principles and 18 actionable recommendations for both public and private sector audiences. Importantly, these proposals do not seek to reinvent the wheel. The industry's risk management and risk transfer solutions are already used for development purposes today. Ivo, Francisca, Matthew, and Shelley are going to share real-world examples to demonstrate this and present pathways in how these strengths can be leveraged much more to spark and drive transformational change and innovations across the economic, social, environmental, and governance dimensions of sustainable development. So let's get started. I'm going to jump over to you, Ivo, first of all. Very simply, what is the Insurance Development Forum and what's distinctive about this platform?
Thank you, Lorcan. First of all, thanks for having me. I'm very happy to represent this institution, the Insurance Development Forum. It actually is a public-private partnership which was launched in 2015. It's insurance industry led and co-chaired by the World Bank and UNDP. And the objective really is to bring the industry's capabilities to bear in international development. So this is important. It's not just about bringing our balance sheet to bear, so for risk transfer, but also the analytical capabilities, the knowledge about how to reduce risk. And you've mentioned it, and Patrick as well at the very beginning. Insurance has such an important gearbox function, right? Such an important element for for growth and economic development, and it's a bit undervalued and sort of assumed as given, but it's not, in particular, obviously in emerging and developing countries. I think what's also interesting is how it came about. This to come into being, this Insurance Development Forum. It was actually professionals from various organizations, both the industry as well as the public institutions that are part of it, which had a mandate in their respective organization, for instance, to develop new insurance schemes in emerging markets. And a few of us came together and understanding that if we do it all on our own and individually, it's much more difficult than sort of joining forces in the pre-competitive stage to develop, for instance, insurance scheme in greenfield in emerging markets. So that's how it came into being. And another differentiator is it's completely focused on implementation rather than writing reports, etc., etc. Our measures of success are implementation. We are organized in various working groups. One, for instance, on risk modeling. Another one on sovereign and sub-sovereign and humanitarian solutions. Another one on inclusive insurance. We have a law, regulatory and resilience policy working group. We have a risk reduction task force, and we have an infrastructure investment task force. And in the meantime, so in the past 10 years, I think it developed into a pretty impressive membership base of about 110 organizations from public development banks, World Bank, Asian Development Bank, KfW, AFD, for instance, UN organization. I mentioned UNDP, but likewise UNDR, for instance, government institutions, the German Ministry of Economic Cooperation and Development, or GIZ, that everyone is probably familiar with, NGOs as well, and about 70 institutions from the insurance industry, including 40 risk carriers. So everyone essentially sort of active, particularly active in the field, is sort of on this platform.
Excellent, Ivo. I think the focus on impact and action is crucial, even though the paper is good as well. Reports are sometimes good as well, but action and impact is really good. Can you share some real-world examples of your multi-stakeholder partnership work, please?
So I'll mention 4 specific programs that we've developed, all in collaboration with the public sector. One is called Tripartite Program, which we launched 2019 at the UN Climate Summit at the time, where we committed to work in 20 countries by 2025. It's 3 parties, unsurprisingly. So the German Ministry of Economic Development and Cooperation is there, UNDP, as well as the insurance industry. And it's a co-financed model. The industry brings its in-kind resources, its expertise and knowledge. And examples from this program include, for instance, what we just recently finished, a project in Nigeria, urban flooding in Lagos, access to, if it is going to be successfully implemented for about 3 million people, based on satellite flood footprint techniques. Payouts will go to the Lagos Disaster Risk Management Agency for emergency relief. Another one is, for instance, smallholder horticulture farmers in Uzbekistan, which was successly piloted just now. And Matthew will talk about something, an outcome for the humanitarian sector. Another program is with the French Development Agency, where we focus particularly on where this organization is lending at the moment to government infrastructure utilities, for instance. So combining lending activities with insurance. And we have various projects there in the pipeline in Costa Rica, for instance, or in Madagascar. then no, it's Mozambique. Sorry, I mixed that up with another program that we have, which is called the Global Risk Modeling Alliance, which is again a co-financing a setup where insurance industry resources develop models for various purposes. For instance, in Costa Rica, for national resilience planning, or for instance for infrastructure planning to make sure that new infrastructure is designed in a more resilient way. And last but not least, we're in the final stretches of a resilience infrastructure fund in partnership with BlackRock, which will really focus on small to mid-sized infrastructure projects, which cross public utilities, but also investment in social infrastructure, and where we will bring the investment side of the balance sheet, the asset side of the balance sheet of insurance to bear.
Excellent, Ivo. It's great to hear that there's 110 organizations involved in the Insurance Development Forum, and there's a really good balance between public and private. It's not just private sector people and all that groupthink stuff happening. Just finally, where's the Insurance Development Forum heading next, please?
I think I'll probably mention two things that I believe are critical. One is, which I think everyone always struggles with, is how can we scale for impact? I mean, there's a lot of work being done. We have, for the Sovereign and Humanitarian Solutions Working Group, we have about 90 professionals, bringing in their expertise, but still the actual, outcome is a drop in the ocean. So one route that we currently pursue is to make sure that insurance becomes a more integral part of the development finance architecture. So we've partnered with the Bridgetown Initiative. If you think about how can we embed insurance element in lending activities of public development banks, how can we potentially embed it in sovereign debt issuance, just to increase the resilience and use mechanisms that are there already and available already, and put an insurance rider, as we would describe it in our lingo, to these. So that's one route to scale. And another big topic for us is to address more systemic and emerging risks, such as the risk of insurability. I mean, Patrick mentioned it at the beginning. What's not insurable is not investable. And we do see in some jurisdictions, more in mature markets at the moment, where, due to climate change, etc., increasing risk, regulatory intervention, some risks are not insurable anymore. There is no offering from the insurance industry. The big topic here is risk reduction, prevention, and bringing the industry's experience, and for instance from our risk engineers, how to reduce risk, and this is a very natural thing for the insurance industry. If there are sprinklers in a factory, this reduces risk. Now, how can we bring that to bear in infrastructure development and project finance to make sure that also going forward, risk continue to be insurable? So bringing these resilient services to bear is to me a big topic going forward.
Excellent, thanks, Ivo. Resilience, scaling, evolving the industry's traditional value proposition into more risk, predict and prevent. Excellent. Turning to you now, Francisca. You've been researching the role of insurance climate change for many years. However, before moving into academia, you were in a commercial lawyer for 11 years. So people might intuitively think that you view sustainable development via a compliance and regulatory lens, all that defensive stuff. But no, your work repeatedly emphasizes the need for the insurance industry to approach sustainability as a transformation and innovation agenda. Can you start by speaking about this, please?
Great. Thanks for inviting me, Lork and Paul. Yes, so sustainability compliance, as you say, that's driven by reporting on what we already do. What I'm interested in is looking ahead on what the insurance industry can do to enable sustainable development, but also how the insurance industry can transform itself and innovate to take advantage of sustainability development opportunities, but also to address sustainability-related challenges and risks. And Eva has already mentioned them, protection gaps and systemic financial risks. In terms of climate change, the insurance industry's role is too often seen exclusively in terms of risk transfer. So this is providing insurance against natural hazards, but also increasingly of ensuring the energy transition. This is, of course, a really important and essential role, but to some extent it's reactive. So I think there's scope for the insurance industry to take a much bigger and more proactive role in risk management, building resilience, loss prevention, through product innovation and collaborations. So my research is focused on the legal mechanisms around that, and especially leveraging the contractual relationships between insurers and policyholders, but also the engagement with a wider sort of range of stakeholders from the public and the private arenas to deliver on these wider goals.
Very good. You mentioned proactive approaches there, as did Paul earlier on and Eva a few moments ago. So this is a key element in disaster risk management strategies, or just risk management strategies for all types of risk. It's also mentioned across UN multilateral development agreements with their repeated references to risk and resilience. But why is it important to leverage the industry's capability in these risk management efforts more?
Yeah, there is a tendency to see insurance just as something sort of post-event. So a disaster strikes and the insurance pays out. And then the proactive loss prevention side is often seen as something that governments should be responsible for. So they should be delivering on these large-scale infrastructure projects that help us to prevent risk. And this, of course, remains the case. But in my opinion, there are also loss prevention measures that can be very effectively be implemented at individual household and business level. And here I think the insurance industry could also play a role as a transmission channel for loss prevention information, loss prevention incentivization, and loss prevention finance. And they can do so by building on existing products, services, and of course the risk expertise the insurance industry has. So in my view, this is not just a philanthropic or exclusively corporate social responsibility endeavor. In my view, that makes business sense too. There are lots of studies that are showing that prevention is better and cheaper than cure. And also what's more in relation to climate risks, we do need to look at loss prevention in order to address these insurability issues that we are facing, and Eva has already mentioned them. Because these weather-related risks are becoming increasingly uninsurable, we see these emerging protection gaps, and of course they're completely counterproductive to achieving the SDGs. So I think here is an opportunity for the insurance industry to get engaged in loss prevention, but it's also an opportunity to sort of rebuild trust and relevance and goodwill with their customer base, to regain that market share that they're losing to uninsurability, and to close protection gaps. So with their risk management expertise and access to data and using technologies, insurers can then expand their products and services into loss prevention whilst pursuing long-term growth. So how I see this working is this could be a virtuous circle of prevention, enhancing insurability, reducing protection gaps. Then you have business growth across the economy, but also for the insurance industry. And then you have more loss prevention, greater insurability, protection gaps decrease in relation to assets and across regions, and you have long-term business growth. So I'm aware that sort of talking about loss prevention and pre-financing in insurance sounds a little bit like an insurance heresy, where you sort of start with the indemnity model, you pay for a loss that has already occurred. But I predict that loss prevention is likely to embed into standard contract terms and property insurance policies in the not too distant future as a means of tackling these protection gaps and creating transformative business opportunities.
Excellent, Francisca. I think I love that insurance heresy language there, because like the business as usual path that's led us to where we stand today is not going to help us transform and innovate for all the things that needs to happen in the future. So the virtuous circle is really excellent. I'm gonna move ahead now just to Matthew. So can I start by asking you, Matthew, just very simply again, what is the World Food Programme? What is prearranged financing, and how does it fit into your disaster risk management toolkit?
Thanks, and well, good afternoon or good morning, everyone. So the World Food Programme is the largest humanitarian agency of the UN system that has been initially created to deliver food assistance to the most vulnerable population after enduring crisis due to conflicts, socioeconomic shocks, or even like now weather shocks and other disasters. For us, the prearranged financing has three main conditions. One is having money that has been pre-agreed to respond to a certain shock, to have like clear and objective triggers, being economic, being weather-based or others, and to have a clear plan to respond when there is a shock so that we can be as fast and as efficient as possible. At the moment, we use prearranged financing through different mechanisms. One is anticipatory reaction. So based on forecast, we can trigger, we can activate interventions to distribute cash, but also to distribute, for instance, drought-resistant seeds against drought as early as possible before the shock occurs, and the intervention ends before the shock. Right after the shock, we have early action through insurance and other mechanisms. We work at the community level, but also at the system level. So more in either in a financial resilience objective or in a more humanitarian response objective. It depends. And for that, we work at the government level and WFP operations. And ideally, we try to embed as much as possible through the social protection systems. That being said, we do not believe that prearranged financing or increasing the amount that has been prearranged is the only response, because we also need to have the delivery mechanisms in place. And that's the reason why we need to work with governments so that these systems are at scale and as efficient as possible. We can't only rely on humanitarian stakeholders. So we've been testing these instruments, 15 years for insurance, about 10 years for anticipatory action. And we're now working to really like integrate them with our emergency preparedness and response plans, which was something that wasn't the case yet at the policy, strategy, and operational levels, so that we can develop a global response plan that has three different windows: before, right after, and the more traditional response type, that we smoothen the response capacity and we improve the impact, and to also like develop a disaster risk financing architecture to optimize the resources that we are mobilizing from our donors.
Excellent, Matthew. I think you emphasize an important point there, that although most of our discussion today is focused on private insurance solutions, like insurance is not a silver bullet. Like we need social protection systems, we need other government supports, and that's really important. So insurance is just one of the prearranged financing tools that you use, but actually maybe just bring it to life. Can you share a real world example and data to demonstrate this, please?
Yeah, well, it's going to be slightly more than that. So last year, we had about 6.1 million people that were protected financially by different insurance instruments for global coverage of roughly 360 million, which is great and tiny at the same time. So I wanted to give the example of Mali. In 2021, we received a payout from the African Risk Capacity of 7.1 million, which corresponded to almost the maximum amount that we could have received. So it was a pretty serious drought. With that, we provided food and nutrition assistance in cash primarily to about like 250,000 people. And each person received on average $36 for a 3 months response. So for a family of 5 people, that was roughly $180. We conducted an evaluation with a company called Tetra Tech that showed that this insurance, this parametric insurance, was a great incentive to be better prepared, to respond faster and earlier than what the humanitarian system normally does, to also procure essential food items at cheaper cost by up to 20%. So we could have saved, and we have saved, a significant amount of resources, but at the same time, it only covered about 3% of the needs. The estimated response was about 210 million. So that's small. To give you another figure, like roughly, during the La Nina event in Somalia, WFP was providing about 60 million in cash transfers on a monthly basis. So when I'm giving you the example of 360 million that is covered, it's a tiny, still a drop in the ocean, to be honest. So what we've done with that, we've done two main things. One is developing with ARC and Gallagher, a reinsurance broker, a catastrophic layer for the Sahel countries that now we're expanding, that is triggering much less frequently, but at a much higher level. So we're receiving like much more money for very infrequent shocks so that we can really contribute significantly to the early response and be more efficient. And with that, we've seen two things. One, in some cases, governments are not in capacity to actually purchase insurance product and to respond as early. So humanitarian stakeholders can be the last wall. So for instance, in Sudan, we purchased an insurance policy while the government was under sanction. And now we are actually like integrating this first layer and catastrophic layer as well. And this was really like, an important step forward. And with that, we also we also started thinking, how can we do it outside Africa in an area where there is no offer at all? So with Swiss Re, with the IDF, with Humanity Insured and the Global Shield financing facility, so Evo with two hats here, we developed an insurance product against drought for Syria in the 4 regions that are producing most of the cereals, in the most highly exposed drought risk. And as you've seen recently with the change of government, the level of food insecurity and vulnerability has just exploded. So the policy was launched in January and is covering about $9.25 million this year, and we will also like replicate it next year. The idea is to use that as a first pilot and then to replicate it to other vulnerable and in conflict countries, so that we're really like bringing insurance as one way to finance very early response, knowing that this is like, one tool among like, that will finance only a portion of the needs.
Right. You mentioned there the need to replicate that work. You mentioned earlier some of your work is just a drop in the ocean, unfortunately. Echoing the point that Evo made earlier about scaling. But just, do you have any final words then on how you plan to expand the use of insurance and how can we make this happen?
Yeah. So recently there was a report that was produced by the high-level panel for pre-arranged financing for closing the crisis protection gap, and we're absolutely endorsing this objective, although it's very ambitious. As I was saying, roughly WFP has about 3% of pre-arranged finance at the moment. So our objective is to reach 20%, which on the way, the 1 billion mark by 2030 is a very important milestone that we hope we will manage through insurance and through other types of risk financing instruments. And for that, we need a certain number of things. One, as I was saying, this disaster risk financing architecture. So far, we have like different tools, but they're not well coordinated. More integrated response plans so that we optimize the way WFP and governments respond in a more efficient way, and we also reduce the burden on the colleagues that are in the field. We need to connect with social protection system. We need to develop new financing models. So not only through insurance companies, but also how can we have the private sector to also take a bigger role in that? How can we not only rely on public donors. That's a key point. And for that, we think that we need to collaborate more and partner with other humanitarian agencies. The other day, I was having a call with the other UN agencies, and they were actually complaining a little bit about we don't have enough risk analysis instruments. And I was actually talking about the Global Risk Modeling Alliance. I was talking about like all the instruments that the insurance industry has. And I think, well, we don't socialize this instrument enough. And finally, I would say we need to have more data and evidence to really, better measure the impact that we have on livelihood, on life saved, efficiency gains for the humanitarian sector. So overall, we're making good progress, but we have a long, long road ahead and not so much time, especially regarding the climate crisis. Humanitarian needs are exploding, so we need to go fast. But I'm hopeful that we can be creative.
Excellent, thanks, Matthew. I think you mentioned a really good point there. Like most of the solutions are already around us. We already have a lot of tools available today. It's about scaling them. Okay, finally, Shelley, we've heard from Eva or Francisca, Matthew, about insurance being increasingly used for climate adaptation related risks, but many people in developing countries don't have access to the social protection and health services that we do in wealthier nations. How is Swiss Re supporting these vulnerable populations to access financial risk protection for these life and health risks?
Thanks, Lorcan. I'm happy to answer that question. But I think first it's really helpful to grasp the size of the global life and health risk problem. So at Swiss Re, we estimate that the global annual life and health insurance protection gap is $1.35 trillion. That's the gap between the life and health insurance protection that people have and the expectation of what they need to cover the cost of an unexpected illness or the death of a breadwinner in the household. And in your paper, you put it really nicely, just put that number into perspective. The life and health insurance gap is 3.5 times larger than the natural catastrophe gap. So while it's absolutely important to focus on solutions to protect against climate disasters, I don't want us to forget the enormous needs on the life and health side. So you asked how Swiss Re supports people to access financial protection for life and health risks. To give you a snapshot, last year, we reinsured 207 million life and health insurance policies and paid out over $15.5 billion in life and health insurance claims. And these claims support more than 14 million policyholders and their family members in some of the most difficult times of their lives when they're facing illness or a death in the family. So those numbers are impressive, but we know that they're really just a small drop in the bucket compared to the massive need that is out there, that $1.35 trillion protection gap I mentioned. So that's why one of the key ambitions of the Swiss Re Group sustainability strategy aims to build societal resilience by fostering financial inclusion in both advanced and emerging economies. And in terms of life and health, Swiss Re does this by aiming to make insurance more available, accessible, and affordable to underserved communities, which is the work that I'm honored to lead. And we usually contribute via risk transfer solutions for life and health insurance protection. And one of my favorite examples of how we're tackling this challenge is in Nigeria. Nigeria has a goal of universal health insurance, but currently less than 5% of the population actually has this protection. So we saw an opportunity to help address this insurance gap as well as the financial inclusion gender gap in Nigeria. And we've done this through a project with 3 other partners. Our lead partner is Women's World Banking, a nonprofit focused on female financial inclusion. And we also worked with a Nigerian primary insurance company called Hygeia and a bank called FCMB to design a new health insurance product that is embedded in small business loans for women. And this product is now providing 100,000 female entrepreneurs and their families in Nigeria with health insurance for the very first time. If I may, I want to highlight a couple of key success factors that this example illustrates really well, I think. The first key is market research, which is crucial from my perspective as an anthropologist and an insurance professional. This Nigeria solution was not an innovation idea coming from Swiss Re executives. It came from Women's World Banking, who started the project by conducting market research on the ground. They went out and listened to Nigerian women to design a solution that was tailored to meet their needs, which is a best practice for all insurance innovation. And I think a second key to success is effective multi-stakeholder partnerships. This Nigeria solution would not be possible without all 4 partners working together with a shared purpose to help these women access affordable risk protection to cover their family health needs.
Excellent. You shared an example from Nigeria. I think Ivo and Matthew have spoken about examples in developing countries, emerging markets, but there is misconceptions that all these inclusive insurance solutions are just for developing countries. What about your thoughts on this view?
Yeah, it's a good question, and I think you're right about that misconception. But inclusive insurance is not just for people in developing countries. We know that there are large protection gaps even in developed markets, which also have underserved populations and needs that are not being covered adequately. I think a good example of this is in Europe, where cancer is the most significant cause of death and illness, and many government-subsidized healthcare systems just simply lack the ability to treat this illness in a timely and an effective way. And those who have cancer also have new expenses associated with their care that are not covered by most public systems. So to address this need, we have partnered with insurers in 17 European countries to provide over 500,000 policyholders with access to affordable cancer insurance products. And these policyholders who have the insurance receive a claims payment if they're diagnosed with cancer. And they also get access to a variety of relevant assistance services, such as a second medical opinion and supporting care. And I think this is really a great example of the private sector stepping in to fill a gap that public health systems are not adequately addressing in developed markets.
That's great, because I think private insurance solutions, they complement and supplement social protection systems and healthcare systems where they exist. Unfortunately, not enough people have them, but that's fantastic. Shelley, I'm conscious of time, so I'm just going to briefly wrap up this, and maybe we'll cover some more topics during the Q&A later on. But okay, Ivo spoke about the multiplicative power of insurance multi-stakeholder partnerships. Francisca emphasized the crucial need for greater investments into risk management efforts. Matthew illustrated how a humanitarian agency is using or successfully integrated insurance into its pre-arranged financing strategy. And Shelley has spotlighted the frequently overlooked but equally important need for life and health multi-stakeholder partnerships. So thank you again for everybody speaking today, contributing to the paper, the course, etc. I'm going to hand over to Isabella and Anthony now, please.
Hi everyone, I'm Anthony. I'm founder of Better Insurance Network. First of all, I just want to thank all the speakers so far, Lorcan, Paul, SDSN team, fascinating stuff. And I think that was a great diverse array of examples of how insurance can address the SDGs. But obviously we all will accept that we've only scratched the surface really on this. But thank you for all your contributions. Isabella's just sharing with you a few slides to accompany my bit. So a bit of background on us. Better Insurance Network is a professional network. We're global. We're based in London. We have around 5,000 practitioners involved in the network. And we're focused on sustainability, education, innovation, and implementation. And we've been really proud to collaborate with SDSN, SDG Academy, and UNITAR on this course, Insurance in the SDGs. Obviously, the speakers have given some examples of real world innovations and partnerships. Education plays a key role in this, getting the links between insurance and the SDGs on the agenda and in people's consciousness is really important. So that's what we're trying to do with this course. It's exciting to get to launch day. It's been several months of hard work. Thanks to everyone who's been involved in that hard work. It's been a real collaborative effort. So as you can see, we have a QR code. You should all have access to the link as well. Isabella and myself are just going to talk for a few minutes on what this course is, what it's aiming to achieve, and then we'll head into the Q&A where everyone can address the issues that have been raised so far. So for context, I think really this course sitting alongside the position paper is another tool to elevate and accelerate the roles of insurance in sustainable development. This slide's an interesting one, I think, because it reiterates some of the messages that's come across from the panel and the examples they've given of partnerships and innovation. It illustrates that insurance directly addresses many of the systemic risks we face and supports many of the solutions that are needed to build a more sustainable world. It also illustrates why this position paper is so important and supports the point that Shelley made a few minutes ago on not overlooking the scale of the life and health protection gap, for example. For context, this graphic was published about 2 or 3 years ago for non-life insurers, and it focuses, as you can see, largely on climate and energy transition risk, which is where a lot of the focus had been to that point. But SDGs should be on this graphic. If we were to go back and do it again, they would very much be on there. And that's one of the goals that we're trying to meet with both the position paper and this course is to put it in mainstream thinking in insurance. Insurance touches every part of society. So if you take insurance as a whole, including life and health, we could put a load of socioeconomic issues onto this graphic, including human health and well-being, obviously. But looking at the bigger picture, I mean, insurance, as we've touched on, it's a financial safety net from the micro level to the macro level. Insurance is uniquely positioned to help individuals, companies, even nations manage risks. I think there's also a really important role to play in engaging and incentivizing with customers to make more sustainable choices. And that feeds obviously into some of the resilience building efforts that we've talked about today as well. And obviously the SDGs, insurance unlocks the SDGs as an innovation agenda. That is really important. It's not just about managing risks, it's unlocking innovation. And I see insurance as a bit like hemoglobin. So it doesn't get the spotlight of the blood cells, but actually it's carrying the oxygen around the body. So it's really, really important. And insurance is the same. Nothing gets done without insurance. It allows capital to flow through the economy. The trillions of dollars needed to meet the SDGs need to be de-risked with insurance or risk advisory services. And even today, insurance underpins any healthy society. And if we flick to the next slide, I think this demonstrates this perfectly. So Allianz released a report early in 2025. Their research found a clear correlation between insurance penetration, so insurance as a proportion of GDP, and progress on the SDGs, both on the life and health and the P&C sides. So there's clear evidence here. The data is telling us more insurance equals more sustainable development. So getting this message across is why this partnership has been born and why we've developed this course. So this has been pulled together as a public-private partnership. So Better Insurance Network is from the private sector, working alongside SDSN, SDG Academy and UNITAR. SDG 17, Partnerships for the Goals. So we're a good example of public and private sector coming together to create a solution here. And we're really leveraging our complementary areas of expertise, our capabilities, our networks. If you just flick to the next slide, Isabella. And we've created a course which hopefully will have an impact both inside and outside the insurance industry. So what's the goal? Really, it's to create foundational knowledge on the links between insurance and the SDGs. We do this in the course through a lot of practical real-world examples of how insurance targets specific SDGs, which Isabella can go into in a second. We also want to highlight how important partnerships and collaborations are to unlock that innovation going forward. And we're hoping that really the course will just start to shift the mindset and spark ideas around this, not just among insurers, but people in the public sector, academia, investors, other groups in and around this space. And sitting alongside the position paper, we hope this will help be a bit of a platform for future real world innovations and solutions. And I know SDSN has some plans to convene people to actually start working on some real solutions around this. So that's the context for why we've developed this course. And I'll just hand over to Isabella from SDSN now to share a few more details on the course itself.
Thank you, Anthony. Yes, as Anthony was saying before, I'm Isabella. I'm with the SDSN, and this partnership between SDSN, Better Insurance Network, and Unitar, we have come together and brought to you a course that is led by UN experts, industry leaders, and academics to really find and have real life examples shared with you on how the insurance sector is actually helping support the Sustainable Development Goals. So the course content is divided into 6 modules, and we are focused on SDGs 3, which is health, 8, decent work, 13, climate change, 14, life below water, 15, life on land, and 17, partnerships for the goals, as this is also a partnership that we are bringing here together. As Anthony was saying, the course is filled with case studies that are incredible list of panelists and faculty brought together to us to understand better how their organizations are working towards on achieving sustainable development through their innovations and products that it's available to their customers. The course also has quiz questions and discussion forums that you can participate with fellow learners. And of course, this course is free to be taken, but you can earn a verified certificate at the end if you decide to pay a small fee for that. And as I was saying, is a free open access course. You can study at your own pace. And the goal of this course is that by the end, you'll be able to understand the 2030 Agenda for Sustainable Development, to also understand how the insurance and the private sector solutions are helping achieve the SDGs, and also fill you in and also be able to help you to illustrate with data and real world examples how the insurance industry is innovating and scaling solutions. It's also an opportunity for you to have new ideas on how do you want to build new products, and also opportunities to help scale up those initiatives to help deliver impact for the SDGs. And also, of course, is to also identify and explain examples of public-private partnerships and solutions aiming to serve vulnerable populations worldwide. We are very happy to say that this course is being launched today. It's open, and we invite everyone in this call to enroll. And if you have any questions, you can reach out to either myself or Anthony, and we are happy to take your questions. Thank you.
So, Lorcan, do you want to orchestrate the Q&A?
Do you know what? There is one question I would just like to ask, because one of our overarching theme throughout today's discussion so far is multi-stakeholder partnerships or public-private partnerships. And I want to ask Francisca, because I know, Francisca, you've been researching this and categorizing it and just bringing it all together. Can you just share some thoughts on this from an insurance and risk management perspective, please?
On public-private partnerships?
Yeah. Yes, please.
So I've been, together with my colleague, Professor Miriam Goldby, we've been looking at a number of PPPs, public-private partnerships across the world. We found that there are already quite a large numbers of PPPs that address specific weather-related or sort of natural catastrophe type risks, but they're also being used in other areas like terrorism, and they're also being talked about in connection with cyber risk. Now, what we found is that they are a good solution to enhance insurability by spreading risks more widely. But our review also revealed that they can be a bit of a sticking plaster. So they're basically not dealing with the underlying causes of the uninsurability problem which made them necessary in the first instance. So in terms of creating a successful PPP or enhancing existing ones, for me, there would be a major case for so strengthening the loss prevention remit of these PPPs, so make that an express objective in the areas of constitution and their remits. Thank you.
Excellent. Maybe before just handing over to Paul, I see there's another question there, a little bit of a provocative question for Matthew. Matthew, have you seen this question here? It's in the Q&A. So does the World Food Programme develop and fund private insurers? Are these insurance products backed by state, UN, or private funds? How are those who suffer ecological harm? I think that this is a really good question that I'm sure you must get asked often, Matthew, about why you're teaming up with private sector organizations.
Yeah, thanks, and thanks for the questions. So no, we do not develop and fund private insurers in the sense that we don't take any participation. We have contributed to initiating the African risk capacity that has then been handed over to the African Union, but they're not exactly a private insurance company. But we do buy insurance for our regular operations and protecting our assets, and it's very difficult considering the very fragile environment in which we're working. So our product are, when we're talking about like programmatic product, what I presented, no, they're not backed by any states, but when we're working, for instance, with the African risk capacity or by CRIF in the Caribbean or PCRIC in the Pacific, we're always working alongside governments to make sure that there is a good capacity strengthening in terms of improving the models, improving the understanding, improving the preparedness aspect. And in some cases, when a government is not able to to purchase the insurance company because they are under sanction, for instance, then WFP steps in usually on their behalf. So when we're talking about macro insurance, we're talking about either a government that is purchasing an insurance product or WFP or another organization purchasing. So in that case, we're not involving the communities in the design of the products because this is really like, at country level. But when we're developing inclusive insurance product, then we are always working with the communities, and they are actually like, a key stakeholder in the design of the product, but also of the distribution and so on, because we're not like imposing product. One thing that WFP has done is that we are recognizing the insurance premium as a transfer modality as much as food or cash. So when we have beneficiaries who are engaged in adaptation activities, then WFP pays the premium on their behalf so that they are directly insured. And progressively, we are introducing a cash contribution so that they can be fully graduated to, and ideally pay 100% of the premium as fast as possible.
So Matthew, thank you. And I'm just conscious of time. Maybe Paul, do you have you've some closing remarks, I'm sure.
Yeah.
Maybe you want to take some of the questions here as well. Leave it with you.
Yeah, so thanks, Lorcan. So fascinating discussions and panel. I just want to wrap up on a few things. So the first thing, as I should have said at the beginning, this is an official side event, but it's hosted officially by SDSN, UCD as a Government of Ireland SDG champion, and UNITAR, right? Because you have to be in consultative state as a UN agency to be part of this ECOSOP events. So thank you to them, obviously. The second thing, obviously, I just want to, before I forget, thank Isabella, Kyla, Helen, Lorcan, for organising and looking after everyone in the side event. But obviously with Anthony, Better Insurance Network, we've been a team putting together the MOOC and the position paper as well. So thank you very much. It's great to get today and just launch that. And then finally, obviously the panelists were just so excellent today, and many of you are involved in the position paper and in the MOOC as well. So we're very grateful to that. So as a professor, though, I am going to give you homework, right? So everyone online, the whole idea of the position paper and the whole idea of the MOOC, which I'll actually do myself going home on the plane, it's like reading. It's like your reading list. It's like your electronic reading list and a way of thinking and a mindset and a motivation. But what really has to happen, and this came up in the conversation, so I really love, I think it was Ivo's idea of the insurance as the gearbox, right? Because I'll just tell you, I've had experiences when I'm in Tanzania. I was just in the president's office when they were negotiating the gas pipeline. And really, I felt they didn't have the data, they didn't have the lawyers in the room, the economists, and then the private sector guys who were trying to get the contracts, were all over it. And even though Saida were trying to help, etc., right? So this is a real problem for the SDGs. Like a lot of the public sector, they don't have the data, they don't necessarily have the modeling across departments, they don't think in a sort of risk sharing, risk resilience way of thinking, right? But the beauty of a partnership with insurance is you have that gearbox, and particularly in the least developed countries, that you could offer them. There's big money involved here, and we're willing to look at the policy, the behavioral changes, to look at what sort of state guarantees, etc. We can show you what sort of floors we could create for you in terms of risk. And we can give you our expertise to do that, because that capacity is so lacking. So that's why when I gave you homework, what we're going to start maybe in the future is a few of these innovation labs at that type of scale, maybe with the Caribbean Associated States, for example, right? Because I think the World Food Programme said it, to go to scale, you got to go across the humanitarian issues and the partners. And the same, you got to go across it. You have to have portfolios. That's when you get powerful. That's when you can actually start to bring out these products and innovation and to go to scale. So it has to be at that level. So any of you who do your homework and read the position paper and are interested, there's a landing page where you can contact us, and we will as a next step through government, if you like, or government associations, be inviting people in to do this sort of innovation on ODA, on humanitarian action, on fiscal expenditures, on debt, bonds, on climate change, and so on, because this is what's missing. And really, it's up to the government and those who want to provide these global goods have to take a bit of leadership in this and invite the right people into the room to do this sort of what we call sandboxing or innovation. So that's the next step. And we will start this process most likely at a side event in Seville, where across SDSN, our work on the Amazon, our work on the Congo and the rainforests, our work on education and so on. I have already invited our teams to think about how you could partner with insurance and how you would get these things financed. And one of the outcomes of the conference in Seville in June and early July will be a solutions platform. And the idea is to get into partnerships and start making announcements that this is what you're trying to do to implement, obviously, the outcome document of the FF4D, which will happen in Seville. So we're good citizens and we want to be part of this multilateral process. We get into teams, stakeholder partners, put up ideas for potential innovations and see who wants to partner with us and actually get it done. Because I really like the point that, for academics, it's great to do the theory and get the citations, but it's time in this era now to actually have implementation. And the same for people working in government, people who are working in the private sector. The talking's over. We need to get into teams and have innovation. And this investment on these transformations will not happen if you don't have the policy change, the behavioral changes, the actual new technologies, the different partners coming in, the different state guarantees, and then there is a chance then you can use the hemoglobin, as Anthony, let it flow, let the oxygen flow through the system using insurance as one of the mechanisms. So hopefully I haven't forgot anything as we close off. So I maybe open it up to any of the panelists have last words, or Lorcan, or who would like to. You saw some of the questions in the Q&E, for example, and the chat box. So anyone want to?
Just thank you from my side, but I'm sure some of our panelists might have something more valuable to say.
There might be something burning. Yeah. So maybe we could put up our landing page at the end. So for everyone who joined here, I didn't thank them, but if you want to come into the partnership, there's basically where, as most people mentioned, even though they're dealing in millions, you know, the idea is that we're not dealing in trillions, and that's what the world needs, right? So it's all just a drop in the ocean. So what it needs is people who are interested. So if you come in, express interest, some very senior and very nice people on this webinar are watching us. Just put your name down and we'll pick you up and we'll see, can we get you into little teams that try and get up onto the action or solution platform of financing for development, and then see whether we can take it further from that point. But you have to do your homework. You have to read the position paper and do the MOOC first, or else I'm not talking to you. You have to do your homework first, and then we can do it. So do you want to wrap? Does anyone want to sign off? Lorcan, do you want to say goodbye to folks? Or
I don't know, Helen, Isabella, do you have comments to finish up? Thanks very much from my side, at least for the last year of work on the paper and the course.
Yeah.
Great.
Yeah, thank you, everyone. Thank you to our panelists and Lorcan and Paul and Isabella and Kayla. Thank you to everyone who came by today. I put the link to our landing page on insurance and the SDGs in the chat. I encourage you to fill out our contact form on that page if you're interested in connecting with us. And you can follow us on social if you're interested at SDG_Academy. Again, thank you to everyone, and you'll receive a copy of this recording shortly.